Good afternoon, traders. This is Christian from Traffic and Trade Group, and this is your end of day recap for Wednesday. What's today? The 28th. Very quiet day, nothing going on, no big earnings reports today. Well, actually, there was one. Affirm had good earnings. I'm joking, of course. Nice move by Affirm. This is one that I played to the long side. I also stuck this in the TTG trend portfolio last week. I was just anticipating possibly some strong numbers and a little bit of a shakeout candle for today, but that should get this name going a little bit. And what's the short interest in Affirm? Let's check this out. And then, of course, we will talk about this 10% short interest. So that helps a little bit. So, of course, I'm joking around. Yes, everybody, I don't know if I've ever seen so much attention on an earnings report with Nvidia, but I get it. Like, and these are things that you can't really ignore too much. Look at the stock come back here a little bit, but these are things that you can't really ignore. And why do I say that? Well, because the market is moving on. The market really cares about this company. I noticed this. Who was it who reported earnings? I think was it SMCI who reported earnings a few weeks ago. Speaking of that name in the news today, but it was a day where there was a whole bunch of earnings reports that came out, and the SPY wasn't moving at all. And then all of a sudden, one of these AI companies reported, and I think it was SMCI, but my memory could be off on this one. But that name came out, and all of a sudden, like the market started to move. So the market seems to like the overall market, SPY S&P 500, because it is, probably the most widely followed index out there. I know Dow is also up there too, but I think the S&P 500 is the most widely followed. Regardless, it's interesting what it moves on, and Nvidia is a decent weight in the SPY. There's no doubt about it, but it's not, it's not 20% of the index. It's 6.7% of the index. But CrowdStrike came out. As I mentioned, Affirm came out. A bunch of other names come out, and it doesn't. The market doesn't do anything. So for now, like this is what the market is kind of really fixated on. And the beauty of this is that well, I don't want to say the beauty of this, but if you can navigate the market and understand what's showing relative strength, you can kind of try to diversify yourself a little bit out of so much of what's the market is hanging on to, which is basically what Nvidia does and what the AI theme does. And you could do that by looking at the RSP index, which we've talked a lot over the last week or so, right, which is the equally weighted S&P 500. You could talk about look at a few other indices, right, and overweight yourself into sectors that are showing strength. Because while the numbers were spectacular for Nvidia, it really is going to depend on what they're doing for this Blackwell chip. And I think why it initially took a little bit of a turn lower is because they're expecting it to ramp up in the fourth quarter, which means there's subtle little hints there that they're delaying it, that there's a little bit of a delay there, right, and that it's not immediately coming out. And that's why you saw this big red candle. So again, I try to say this in these end of day videos, but it's not so much about what the company did in the past, about their actual, whether or not they beat what their earnings are. It's about their future guidance and where the future growth is going to come from. And it will depend on what Jensen says in the conference call too. But you could see this is not a big move for the stock. It's down a couple bucks here. And what I did today was I sold an iron condor. I just thought 11.5, or excuse me, it was 11% over the weekend, and I tweeted that out, I think on Sunday, for everybody. But I also talked about it in the trading room today. 10% move is a big move. So I sold the put spread and I sold the call spread. I need the stock to stay above 119 for that trade to get maximum profits on that. But and I do. I hope it stays above there. And I am long in the TTG. I do have a position in the TTG trend portfolio. It's 3% of the index. So I am vested in what this company does. And besides the expectations being so high, I do think that they'll be the leader within the industry. Like I would much rather go long this name versus AMD or versus, you know, a competitor who's coming out with AI chips. They just seem like they know there's just a step in front of everybody, and I would just rather stick with the leader. And I get that there's a lot of expectations, but let me talk a little bit about you know, of course, like that's what everybody wants to talk about is Nvidia. And again, like I said, as I just demonstrated, it's moving the market quite a bit, lockstep, and I felt like that's what it's been doing this week too as well. You know, the Qs were down 1.1% today. What had relative strength today? Just the same things. If you listened to my video yesterday, and I would encourage you to do that, because I hope some of these videos for you and some of the concepts that I go over are a little bit eye-opening. And what I try to really just hammer down the point yesterday is like how crazy some of these moves have been in the lower volatility areas of the market. And that's exactly what continued again today. Look at the banks. You know, even though I think the banks are a little bit different than the financials, but you know, I've talked about the insurance companies and the aerospace companies and consumer staples, healthcare, you know, all of those, the financials. For now, like that's where the strength is. And it just seems like you know, investors always want reasons for why something, you know, why this is going on. You know, it could be because of the election uncertainty, right? Folks, even though, you know, I truly believe, not to be political here, but I truly believe a president doesn't really matter that much, you know, unless they really screw something up. And, you know, so I'll leave it there. I don't want to get further into that, but as long as whoever the president is, like, doesn't really affect international policy too much and do anything too much, you know, damaging domestically, it really doesn't matter that much who the president is. You know, that's the beauty. Like I really believe that the U.S. engine can run on its own. And again, it has to, you know, every once in a while, the Fed needs to come in and, you know, boost things, boost liquidity and so forth. But, you know, they're controlling the money supply. And, you know, again, I don't want to get off tangent here, but, you know, things that we do know is that both whoever wins this election, there's still going to be government spending, you know, so they're not going to slow down in that. And there's just not going to be a president that's going to tackle one of our biggest problems out there, in my opinion, is, you know, the interest expense. The interest expense right now is the largest expense. Like, you know, they always show like the overall pie of like where the US spends its money, right? And it's usually like defense and healthcare. Well, now it's interest expense on our debt. So to me, like, you know, we just want things to be a going concern. We want, you know, if you have kids, you want your kids to have a good future. You don't want this jeopardized by, you know, poor decisions by politicians who just want to stay in control. So anyway, I try not to get political, but that's, I think, why that's why this is going up so much, is because probably political uncertainty going on, and probably a number of other factors too. But that's what you have going on here. You know, looking at the Qs, you know, trying to hold on to that bottom of value, and you know, this could shake itself out a little bit, and maybe price recovers and we move back up, and maybe we'll see some profit taking happen out of those lower volatility areas of the market. It's one of the things I was saying today. Like, even though that had the strength today, I would be careful about adding new positions into you know, some of these areas that are getting pretty stretched. You know, the financials are, you know, they're getting there. They're not as overbought as they were in here, but I mean, it's been pretty impressive. I mean, what can you say, or what, you know, what can you not say about this? I mean, you know, healthcare, you know, again, just there's no volatility in this right now. Whereas the overall market, you know, and the VIX shot up 10 points today, but you're not seeing it in some of these other areas. So all I'm trying to convey to you in this report is just what's going on right now with this market. And this market just doesn't want higher beta areas of the market right now. And it could also be you know, it's important to think about that in September too, right? The main goal, like, because we're just about finished with August, right? My main goal as a trader is to capitalize on when the market is doing well, and really is to try to avoid weaker situations. And we know that September is just a weaker time of the year. But, let's say that this market does retrace some of this move, right? And I don't have a crystal ball. And, what I keep watching is this top of value. So the MarketWebs value areas gave us a great signal. Once again, we stopped shy of that, and we have not been able to break through that. And so far, the developing September value area, which is this, it still is taking shape because it relies on all the activity from the current month, which is not done yet. But it's going to be, the resistance is going to be very similar to that. So, it just kind of tells us that for now, we might be range bound, and that wouldn't be the worst thing. Like if we manage to kind of get through September and we just kind of go sideways a little bit and the volatility doesn't really crank up that much, maybe we'll see a pretty decent, end of the year type of rally. So that's now it's a little bit of, I think, survive in advance, right? Get through some of the weak periods and try to find some areas that are showing that strength. And here's the KIE, here's the insurance ETF. Again, would I buy this up here? No, not necessarily. But I talked about how the credit card companies were doing pretty well yesterday. So they didn't really have any follow through. It looks like MasterCard did take out that VPOC up there today. For some reason, I thought that was a little bit higher, but and nevertheless, that was taken out. I talked a little bit about Visa. I still think Visa might be in play, even though it was down a bit today. But yeah, I mean, there are still some good earnings reports out there. All right, I'm going to leave it there because I'm sure you're going to hear plenty of other commentary. But again, my thought was to sell premium on this event. I thought just, I don't, like I said, I don't know if I've ever seen such a widely anticipated, earnings report, and everybody's telling you how important this report is and all of that. I would focus on some of the other areas of the market, regardless of, again, the numbers are always interesting, what a company does and what it executes, but it really comes down to the price action, right? And if this thing is stuck in here for a bit, there's going to be other opportunities. I was making a joke the other day because in yesterday's video, I talked about Philip Morris and how it's up about 20% over the last 2 months. Now, again, I'm being very short-sighted here, and a couple people got mad at me because I said this, but I said Philip Morris has been up 20% over the last 2 months, and Nvidia is up 3% over the last 2 months. Now, I get it. That's very short-sighted because if you go back further than 2 months, the Nvidia performance is much better than Philip Morris. But you have to ask yourself, like, what's going to go up the next 2 months? And coming up with stats that say, if you invested $1,000 in Nvidia 5 years ago, okay, that's great if you did that, and it's great to kind of put that performance in perspective. But you got to think about what you're going to make money, what's going to go up for the next 2 months, right? And that's the point that I was trying to make is while everybody focuses on one company, it hasn't done anything in the last couple months. And again, I get it. Over the last year, it's been an amazing performer. But you got to think about what is going to perform next. Not do this stupid nonsense of, oh well, if you invested this much in a couple of years ago, you could be a millionaire. Like, okay, that's great for when you're at when you're having a cocktail, when you're out with friends, you could talk about that. But if you're looking to make money, you got to think about what is going to be the next trend. Where is the money going to go? Why is it going to go that way, right? And that's our job. That's my job to try to figure that out and to focus on trends and to focus on relative strength, right? We want to be in the next thing that's going to go up 20%, and there's going to be a lot of false starts. I got out of Bitcoin. I know no one does this. I see these people on Twitter who've got a lot of followers, and I think what the key to them is they never admit that they're wrong on Twitter. But listen, I try to trade in here, right? I thought that and this is what's tricky about this market. I was looking for a move to the top of the value area, and it fell out of bed today. So is it the end of Bitcoin here? No, I don't think so. But for my trade that I put on, right? And again, my trade and this is a shorter term trading account, right? it broke the level that I wanted it to stay in, and that was 60,860. So I'm out of the trade. Why would I stay in a trade, right? So this is like by probably like one of the most important things that I go over in the trading room, as well as like it doesn't matter like how convicted you are on a trade. When you put on a trade, you should have a plan every time before you even click the mouse. You should have a plan about where you think the stock is going to go, the stock or crypto or whatever, and where you're going to take it off if your idea doesn't work. So for me, my idea was if it fell back outside of this line, bottom of value, and that's it, I'm out. And I'll try again another day. But it's all about. And I was talking to somebody about this earlier. It's all about whether taking small losses. You're going to have to take, unfortunately, learn if you want to be a good trader. Unfortunately, you're going to have to admit that you're going to be wrong a lot, and that takes confidence, and it takes it takes self confidence that you're okay with being wrong a lot, because small losers, I'm surprised I haven't said this in a while, but I usually say this like once every couple of weeks at least. You can only have 4 trades, really, 5 maybe, right? Those 4 trades, they're either going to result in a big winner. That's what everybody wants, right? Or a small winner. That's number 2, right? Or a so a big winner, sorry, a small winner, or a small loser, or a big loser. That's 4. Number 5 could be flat, right? But it's really the 4 trades, right? You just can't have those number 4, which takes you out of the game and could ruin your performance for the week, the month, or the year, is to have those number 4 trades, which are big losers. So it is nothing about like trying to predict and make market calls. It's just basically you're giving it something a shot versus a level, and letting it go from that point, meaning let it work for you and let it do what it's supposed to do. If it doesn't do what you think or what it's supposed to do, you start over, right? And it's game over, and unfortunately that happens. And it's a game of that you have to, there's many games to be played, right? It's not just you've got to hold on to it no matter what, right? You're constantly, every trade is a new game, right? So it doesn't matter if you lose 3 or 4 games, as long as you can win 6 or 5, or have 5 winners that make up for those small losers, right? That's what it's all about. But I tell you, I shake my head at what some other people are doing, where they stick into trades, for a long time, and that could really blow up your account if you don't have the ability or the confidence to understand that you're going to be wrong a lot in this game. So I show you these things because I think it should help you more than following somebody who's never going to admit that they're wrong, and they're just going to get more and more entrenched in whatever idea that they sent out. I get it. There's a lot of stocks over time, or a lot of things that will go up over time. But I've been doing this for a long enough time that I know that stocks can continue to go lower and lower and lower. And I can give you countless examples from 2019, right? I for a while, I kept hearing somebody talk about how great pot stocks were. And like when pot, oh my God, what a great buying opportunity pot stocks are. Like here's a great example, right? This MSOS, this was a $52 ETF, right? And look at it now, right? It still can't get going, and this is not a buying opportunity. This is what's called weakness, right? It's almost back at 50. I think it is back at 52-week lows. So there's a number of stocks that just aren't going to come back all the way. Maybe they'll bounce. And on those bounces, things that are in downtrends, you want to be selling. But anyway, I can go on for a long time. I'll leave it there. But the more that you can learn some of these concepts and to stay out of the names. The last one that I'll talk about, and I talked about this one on, I was on with Joel from Benzinga, and I talked about how investors fall in love with these companies, and Once this name breaks, talk about how the 50-day moving average, how simple that is. So even if you're not using something as sophisticated as the value areas and the MarketWebs, you just have to use the 50-day moving average. Once this thing broke the 50-day moving average, we talk about this all the time. For a name that has momentum, you can use the 20-day moving average or the 50-day moving average, right? And once it breaks that, it's the stock is done, like in terms of showing you a good opportunity, right? And look at this thing break down, right? And I have not been in this. This was a name that I played time and time again back in here. But once it broke the 50, maybe I tried it once, but it was out very quickly. You just have to understand that you cannot fall in love with these names because you don't know what's going on. You don't know, you're not going to, and I think like this is a good example. Like you're not going to know what's going on with their accounting. You're not going to know what's going on inside the company. So you pay attention to what the price is telling you. And I feel very good. Sometimes I feel of course, when I make, when I have good winning trades, of course I like that. But I also feel very comfortable too when I realize, like with my trading system, that hey, I have not been in this thing at all in the last 6 months or so, because it never showed you a reason to get involved in it. And going down is not a reason to say I'm going to buy the dip. No, you don't. No one, none of us know what's going on inside the company. None of us, right? So once the thing breaks that 50-day moving average, that's your signal. And if it's truly going to be, this is the other concept, and this is the last thing I'll say in tonight's video, I promise. But the if it is such a great company, it will be able to get back above its 50-day moving average or its 20-day moving average, and then you could ride the next trend. There's no reason to bottom pick. All right, guys, have a great night. See you tomorrow.